U.S. and China trade talks appear to be going somewhere.
Marketplace Morning Report is supported by Progressive Insurance, helping protect a wide variety of small businesses with over 30 customizable coverage options to choose from. It's small business protection that won't break the bank. Online quotes available at progressivecommercial.com. And by the United States Postal Service, offering stamps for purchase at over 40,000 supermarkets and drugstores and at wholesale clubs, Costco, Walmart, Sam's Club, and BJ's.
From Marketplace, I'm Sabri Benishore, in for David Brancaccio. According to a post from President Trump on Truth Social, the U.S. and China have reached a deal that would allow TikTok to survive. This is as U.S. and Chinese trade negotiators wrap up a second day of talks in Madrid. The president also said he'd be speaking with Chinese President Xi Jinping on Friday. Marketplace's Nancy Marshall-Genzer has more on the negotiations.
Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer are leading the American delegation to the talks. In a statement, the Treasury Department says they'll discuss key national security, economic, and trade issues of mutual interest, including TikTok. TikTok faces a deadline this week to find a new owner that's not Chinese or be banned in the U.S. The latest tariff truce between Washington and Beijing expires in November. Besides tariffs, the two sides are expected to talk about shipments of rare earths from China and Chinese purchases of U.S. agricultural products. They could also lay the groundwork for a meeting between President Trump and Chinese leader Xi Jinping, possibly next month at the Asia-Pacific Economic Cooperation Forum in South Korea. I'm Nancy Marshall-Genzer for Marketplace.
All right, let's do the numbers. Dow, S&P, and NASDAQ futures are all up in the 1 to 2/10% range, with Dow future up 95 points. The yield on the 10-year Treasury is 4.04%. Consumers are the engine of this economy, and tomorrow we will get government data on just how consumey they have been feeling recently. We're talking about the level of retail sales in the country. But we already have some clues from private sector data on how that's going to go. The National Retail Federation released numbers on Friday showing that retail sales rose 0.5% in August and were up almost 7% year over year. And that, in this economy, is pretty good news. Marketplace's Samantha Fields has more.
If you just look at how much people are spending on all sorts of things, you'd never guess how worried many of them are over tariffs, rising inflation, and a slowing job market.
Consumer spending continues to surprise to the upside.
Ted Rossman at Bankrate says over and over again since the pandemic began and inflation spiked, economists have been expecting consumer spending to drop, and it just hasn't.
I continue to be curious about how long can this last.
Some of the increased spending people are doing is because they have to and because things cost more, he says. But some is because they want to go out to eat or travel. Charles Lieberman at Advisors Capital Management says the important thing is that they're buying something.
Does it really matter if you spend money on a tape recorder versus a steak? You're spending money.
The main reason consumers were able to keep spending money in 2021 and 22 as prices rose is that they had a lot of savings from early in the pandemic. But Mark Matthews at the National Retail Federation says that's not the case anymore.
The thing that is keeping consumers going right now are wages. Wages continue to exceed the rate of inflation.
And as long as that's true, he says consumer spending will likely stay strong. I'm Samantha Fields for Marketplace.
Marketplace Morning Report is supported by Avalara, providing cloud-based solutions for businesses to manage property tax compliance. Learn more at avalara.com/property tax. And by Schwab. Schwab offers investors choices like full-service wealth management, self-directed investing options, and trading on Thinkorswim. More at schwab.com.
The Labor Department keeps track of prices of imports coming into this country before any tariffs are applied. This is called the Import Price Index. It comes out tomorrow, and you can tell by looking at it who is paying for the tariffs. Basically, if the prices in this index come down, it means foreign companies are lowering their prices to eat some of the tariff costs. They mostly have not been doing that so far this year. U.S. consumers and companies have been paying the tariffs, but there are some high-profile exceptions where import prices have fallen in recent months, and foreign exporters are trying to offset the cost of tariffs. Marketplace's Justin Ho reports.
One category where import prices have fallen is computers and other electronics from China. Sudeep Saman at the consulting company Alex Partners says a lot of electronics manufacturing has moved away from China because of tariffs, and Chinese manufacturers want to keep the lights on.
Because this caused a surplus capacity, the Chinese manufacturers are looking to further discount to fill that capacity.
Saman says another reason is because manufacturers are worried that the president's tariffs will make their products too expensive in the U.S.
If the prices are not at the right level in the United States, ultimately everybody loses.
Other categories where import prices have been falling include Chinese apparel and fabricated metals. Megan Schoenberger, senior economist at KPMG, says the price of European beer, wine, and liquor is down too.
They are actually down from December 2024 to July 2025, nearly 11%. Now, as of July, the tariff on those products was 10%.
Schoenberger says that's a sign that many European exporters are concerned about losing market share to their American competitors.
We expect there to be more discounting in sectors that have alternative domestic sources of supply. The U.S. does make a lot of wine.
Schoenberger says many exporters will eventually have to pass tariff costs on to American consumers. But the alcohol industry is concerned that consumers can't handle many more price hikes, says Spiros Melandrakis with the research company Euromonitor.
Any even minor price increases from this point onwards, in most cases, will translate into straightforward sales declines.
Alcohol sales in the U.S. were already falling in the 3 years before the president's tariffs even took effect, according to Euromonitor. And Melandrakis says many alcohol importers and distributors here in the U.S. can't afford to absorb the cost of tariffs either.
Adding more costs on that already difficult operating environment, some of them will inevitably go under and go bankrupt.
And that possibility could be what's pushing alcohol exporters in Europe to keep their prices down. I'm Justin Ho for Marketplace.
In New York, I'm Sabri Benishore with the Marketplace Morning Report. From APM, American Public Media.